Hi, everybody. It's Thursday, and it's time for your weekly dose of Future Law Bootcamp. I'm your host, Joe Borstein, CEO of LexFusion and certified total freak about legal innovation. Today, I'm here with Jaes, founder and executive director of 6 Parsecs. Hey. So in Future Law, the lawyers of tomorrow meet the change makers of today. We're going to discuss, as always, the tectonic forces bubbling under the surface of the $800 billion legal industry. Today, globalization is allowing lawyers and other professionals from all over the globe to collaborate seamlessly on legal work. We have technology getting ever more exciting, automating the routine processes of today and relentlessly crawling up the value chain. The status quo of legal regulation is being questioned and changed, allowing professionals outside of the bar to work right alongside lawyers, solve problems at scale, and maybe enjoy a little of those profits of traditional legal work. And finally, outside investors are pouring in. It's not just us. These investors see opportunity to make a broken system dramatically better. Futurist Peter Diamandis likes to say, if you want to make $1 billion, figure out how to help 1 billion people. That stuck with me. Law affects every single solitary person on this planet. There are a lot of people to help. There's a lot of money to make. So whatever drives you here, idealism, greed, or even just excitement, I beg all lawyers to pay a little bit of attention to the legal innovation space. You might just find your purpose here. So with that, again, today we're talking to Jaes. J like the letter, like you don't remember. Jaes is the founder and executive director of 6 Parsecs, a research and insights firm for the legal vertical with a focus on data and making it actionable. So let's start with the ultimate softball. Tell us a little bit about 6 Parsecs, Jaes.
Yeah, absolutely. I'm so thrilled to be here.
So happy to have you.
Yeah, this is going to be fun. So 6 Parsecs, like Joe just said, is a research and insights company focused only on the legal vertical. With all the idiosyncratic attributes of the industry, we actually don't have traditional kind of, very intense market analysis coverage. That's a gap I really felt while I was serving as the director of strategic planning for Seyfarth Shaw. We have a lot of surveys and we have a lot of industry experts providing commentary. But as an executive at a law firm, pulling all that together and creating a cohesive, synthesized picture of what's happening in the industry is so hard because, yes, $800 billion, that's a pretty sizable vertical, but we work in an incredibly fragmented, balkanized industry where there are plenty of micro markets. I would characterize it as a collection of micro markets that add up to 800 billion. So getting a big picture sense of what's really happening in the industry is basically the mission of 6 Parsecs. So we work with law firms on strategy. We work with legal tech startups in many ways because I think it's very important to stay at the forefront of the change that's coming in our industry. And to a lesser extent with corporate clients who are looking for new ways to buy and consume legal services. So tracking all these trends is a very difficult challenge for most players in the industry because everybody is actually very knowledgeable about their corner of the market. But the market is very large and it is a very diverse, it's not a monolithic whole. There's a lot of little pockets with their own qualities that's really important. And, I think we took a pause with 6 Parsecs because I most recently was the global head of pricing at Baker McKenzie. And I think these lessons really, really helped me during my tenure there. And really, my time at Baker really confirmed a lot of the things I was thinking about the market because, of course, from that vantage point, Baker McKenzie is, I think, still the third largest law firm in the world by headcount and revenue, one of the first global firms, and kind of looking at geographical divisions. Yeah, that was really fascinating how legal business is done all over the world. And there are, unique attributes region by region that you do have to take into consideration. So I think that, getting a picture that makes sense to people, right, about what's happening in our industry is really important.
And before we dig deep into one of your most recent pieces, another thing that makes it interesting is virtually all the revenue flows through non-publicly traded entities, right? I imagine that makes the research much harder to come by. Is that tough?
Absolutely, absolutely. That's why we don't have typical kind of analyst earnings calls. We don't have, the kind of robust reporting that comes out quarter by quarter that you see for corporates. So yes, absolutely, that makes, market analysis very challenging. And, that actually gets us right to, why I'm here today. Hot off the presses, the annual AMLA 100 issue from the American Lawyer was actually a critically important innovation for the industry, for the American Lawyer to start publishing these rankings and the at least the self-reported performance figures from the largest law firms in the world. Yeah.
And so for those of you that don't know, I believe it was published Tuesday. Jay wrote an amazing article on the annual AMLA 100 edition of the American Lawyer. This is something law firms and clients wait for every year, and she really spent a lot of time and dove deep into the numbers behind the numbers. That's the reason, besides loving her company, that's the reason I asked her on the show this week, because I think people are going to love the article. If you haven't read it, please check it out. But also would be really interested in hearing straight from Jay some of the kind of intel and thought that went into putting that really fantastic piece of research together. So do you want to walk us through on a super high level, and then we'll dig in, like the key takeaways?
Yeah, absolutely. So I strongly encourage everybody to check out all of the reporting this year. This is a really extraordinary year for the AMLA 100, as it was for the legal industry and the world around us at large.
I was going to say, pretty much everybody had a weird year this year.
Absolutely. But for people who are super nerds about legal business, like you and me, and everybody who has a stake in the legal system, I think, this is of great interest. What is happening?
Absolutely.
Yeah. Especially because, you threw out that $800 billion number for the global legal market size. The AMLA 100 takes about $110 billion. So if you can understand the big trends from the performance reporting of this group, it is absolutely a signal as to what's happening in the market overall. So that's kind of why I think that this is worth everybody's attention. As far as the piece I wrote, it's a little different than kind of the year-to-year overview of the numbers, because the American Lawyer has an amazing editorial staff, and they cover the year-to-year changes very well. The thing I wanted to add this year is a longer term view. So the analysis that underpins this article is a longitudinal benchmarking study that goes all the way back to 2007. And the reason that we went back to 2007 is because we want to look at law firm performance at the each individual firm level over an entire business cycle. So the bust, boom, and then bust again, right? So we are at the beginning of a new recovery cycle. I think it's extremely important to kind of look back and learn from history. Joe and I share a lot of interests, but history is one of them. I was a history major in college, and I think that there are important lessons to be learned from the winners out of the last recovery. And then so what we did is to create a model using key metrics we believe are most controlling for long-term outperformance. And by outperformance, I mean doing better than your peer set, doing better than the rest, right? Who are the standout performers? And we divided the AMLA 100 into two groups: resilient and non-resilient firms. So resilient firms outperform their peers over a longer time frame. So I think that it's of great interest. There's some interesting tidbits about which firms are doing well. And obviously Kirkland and Latham, we've heard a lot about how they've been successful, how they've managed this kind of meteoric rise through the rankings in revenue and profits. But I want to highlight a broader group of firms from different regions in the country, from different practice areas that are doing better than their competitive peer set in their own segments. So I think it's in a way, it's a bigger picture view, but it's also a more granular view of the markets, I think, and I hope people will find it interesting.
Yeah, so a few things that stood out to me, and obviously correct me if I'm wrong, but 92 out of the top 100 increased profits per partner.
Yes, in 2020, that
So
is
if you're a
something that happened.
layperson, right? If you're a layperson who's not digging in at all, your first reaction is, "Wow, this is overall just fantastic news." I think by the end of the year, it was not. It was understood that white collar businesses were doing fairly well, but 90+% increasing profitability sounds unbelievable. Is it as good as it sounds?
It is, and it isn't.
Great lawyer answer.
Yes. So let me address that in a little bit more detail. So for industry watchers who follow the trade news and who were following quite closely over the past year, we all know that law firms took extreme austerity measures. There was a period of immense uncertainty, I would say, certainly in the US market. I think it peaked in April. From the end of February, March, April, there was a lot of uncertainty about what the world was going to look like in a couple weeks. We had very few answers, lots of questions, right? So I would say that most firms really cut costs on their way to these profits. And that's an important thing to remember because one, it's very much the same as what their corporate clients have done. Extreme expense and cash control over the year, paired with shorter planning cycles.
And putting it more bluntly, what are the big ticket items that they were able to actually cut out? And there's nothing wrong with cutting costs as a way to increase profits.
Yeah, headcount went down.
Headcount went down. Okay.
Yeah. Which, I think it rebounded near the end of the year because obviously headcount is a point in time measure. But generally speaking, I think a lot of firms are taking this year to right size their workforce. They're really thinking about the size and shape of their business heading into the recovery. And then so we did see some headcount contraction throughout the year and much more moderate growth rates, even after the year shook out. I think there are some practice differentiators in the outperformers in 2020 versus the laggards. Across the board, litigation suffered a lot. I think that's something we should come back to that. Certainly, I think that's going to be a big story for this coming year. But transactional practices ended up doing very well this year, even though there was a lot of uncertainty in Q1 and Q2. Most corporate clients put all kind of non-essential projects on ice in Q2. So demand just dried up overnight in March and April. Where that came roaring back was transactions by late Q3 and Q4. So a lot of firms finished really strong, paired with extreme expense control, I think is what explains these extraordinary results from the AMLA 100.
And I'm sure you can't generalize this perfectly, but how do revenues compare to profits in terms of if 92 out of 100 increased profits, did you have a similar number increased revenue, or did many just grow profits through cost cutting?
Yeah, here's a nuanced point that I do want to make. I really want to direct everyone's attention to revenue per lawyer.
Yes. That's really important. Yep.
Yeah. It's a very important distinction. The aggregate total revenues of the AMLA 100 have gone straight up for many, many years. That's a result of many different trends, but consolidation is one. The larger firms are getting larger, and then so it's important to look at revenue per lawyer. So taken in the aggregate, the average revenue per lawyer in the AMLA 100 did tick up just under 5%. Which is still a very, very strong performance. One of the reasons for that, though, is that the advisory work that really saw an increase in demand over the past year was really partner intensive. So I think there were more partner hours worked in 2020 than in recent years. That helps explain some of the uptick in revenue per lawyer. I would say, and I'm glad you went straight to this point, because one of the strongest indicators of long-term outperformance in the 6 Parsecs study is the ability to manage revenue growth, revenue per lawyer growth year over year. That is one of the strongest indicators that you are going to outperform your peers. So I think that, revenue growth was not evenly distributed, because growing revenues is actually harder than cutting expenses.
Right. And so for people that don't live in this world, what contributes to revenue per lawyer going up besides the obvious more hours, raising prices? I mean, is there anything else? Is it that simple? Is there more to it?
It's really not. And then so I think what's really interesting is we have this idea that, the status quo that we rail against has always been in place, and it's just not true. I think I've been in a lot of debates about the imminent death of the billable hour.
Yeah.
And, that's one of my unpopular opinions. I think the billable hour will be around forever. There is always going to be a place for the billable hour in professional services, period.
Yeah.
Now, I think that if you look at the most, yeah, exactly. The most profitable firms actually are very good at contingent fees, success fees, fixed fees. So, this idea that we have a standard kind of operating procedure across the industry and it's the same everywhere is just not true. So when you look at AFA adoption, where, clients really demanded a different way to package, to buy and to use legal services, you see, client demands take different shape in different practice areas. So litigation was the first hit, which is why I think innovation really exploded first in litigation. You see that extending and a lot of uptake and client interest in different ways to do transactional work now. And then different types of investment in innovating advisory work, as well as the kind of run the business work that stays within the corporation, right? So I think in terms of what drives revenue per lawyer growth, it is really understanding your own market and how your clients want to buy from you. Mm-hmm. So yes, rate management is an incredibly important driver, but actually having the agility, organizational agility to price the way your clients want, right? So managing multiple pricing models and managing them profitably is an incredibly important driver.
Yeah, that's right.
Understanding what clients need tomorrow that doesn't exist today is a huge, huge driver of RPL growth. The most successful firms do pay attention to the shifts in the regulatory framework. How is the competitive and regulatory environment around their clients going to change in the next 3 to 5 years? And then by becoming the domain experts in those specific regulatory, subsegments, mm-hmm. That's how you protect RPL, by actually being the best.
Yeah, I love it. So let's get to the fun stuff. Who crushed it? Who just absolutely crushed it this year?
I think this is going to be, yeah, I think this is going to be a very popular opinion, but I think Davis Polk certainly won the year. It was a dominant performance overall.
Yeah. And for the record, it is a competition, right? Yeah. Somebody's got to win. So Davis Polk won 2020. You heard it first.
Absolutely. But I also want to actually just a few notes on Davis Polk because I think it merits the attention and the accolades. Davis Polk wins really by creating and protecting very defensible moats that are built on subject matter expertise. I think that's a lesson that all law firms can learn. I am a huge proponent of legal innovation and innovating the delivery of services, right? But the lawyers have to continue to stay on the leading edge of the law. I think Davis Polk's 2020 was coming off the back of a very strong decade, very sustained investment and talent, amazing focus in their practice areas. I think one of the best managed firms in the world, for sure.
No,
I know everybody will be curious. So I do want to say Kirkland and Latham both posted very strong performance, even though they both had monster decades, right? Especially Kirkland. I think this was going to be a really important year for Kirkland, especially as some of their big ticket lateral guarantees run out. Is that strategy going to work for the long term? I think they've done a fantastic job positioning themselves in emerging areas of need for clients, strong focus on restructuring. So they did very well. I want to point out Ropes and Gray is actually also doing very well, also sustaining accelerating momentum from the last 5 to 6 years. And then I think the firms that deserve a mention are the West Coast firms. Fenwick, Fenwick and Cooley are crushing it.
Yeah. And and you don't have to name them by name or do. I'm happy with that. Who I guess, for lack of a better word, disappointed or kind of didn't come up with the goods or even slipped down the rankings, and is it obvious why?
Yeah, I want to throw out a note here. I think it's really important to exercise empathy when we talk about these issues, because these are real people, real jobs, real companies. There's a lot of livelihoods at stake. So, I am never pleased when I see firms struggling. But I know people will hear this with a bit of schadenfreude. I would like folks who check out my article to look at one of the figures where I focus on the Wall Street firms. There's a lot of generalization about kind of the richest firms in the world. Mm-hmm. There's a lot of volatility within that segment, but a couple of firms definitely are struggling. So I point that out because position is not destiny. Sure. Just because you are one of the most elite firms in the world one year doesn't mean it's always going to be that way. So I think Sherman is struggling a bit. Cadwalader, I think, is slipping on key metrics. But, I know both firms are making investments to turn around some of the recent declines in performance. And I think also they have, changes that are being made to the size and shape of the equity base. That's really interesting. So digging behind the numbers, digging a little bit deeper to understand why the numbers are changing the way they are is really important. As a whole, litigation heavy firms did not do as well last year. So I think this is a great time to kind of talk about that. One thing I think I want to point out, although I think people will notice, Boies Schiller has fallen out of the first 100. So we'll see more about that when the second 100 rankings come out. But, a pattern I want to kind of draw out here is that Williams and Connolly also fell out of the first 100 a couple years ago, and they're not back. If you kind of look at the smaller firms, the best litigation firms tend to be smaller boutiques. I think you'll see more performance dispersion, but as a group, I see them struggling the last couple of years. That's not totally surprising, but I do think that litigation practices need to be planning ahead for a monster 2021 and 2022. Yeah. So, and that, when I see planning ahead, I mean on multiple fronts. So maybe we can talk a little bit about litigation. And I know you have strong opinions and feelings about that. So what do you think?
I mean, I've always just wondered if it's inherent in a pure play litigation practice to suffer kind of more severe booms and busts. And obviously, I mean, basic diversification than a more diversified practice. So, you see it and it makes great news, but I'm not sure how meaningful it is. Also, you had a much lighter touch regulatory environment for the last 4 years. I think it's going to be really interesting to see what happens when regulation, comes back to bite. And then, of course, the old phrase, it's hard to know who's swimming naked until the tide goes out. We really never had the tide go out. I mean, let's be honest with ourselves. It was the shortest little downturn, and then the largest bailout in American history. A lot of friends in the distress space, both on the legal and the finance side, and there was none. Like, it didn't really happen. So it will be really interesting to see if it is a unbelievable tidal wave of litigation work over the next couple of years, with all of those trends pushing in one direction.
Yeah, so I think
no real question there. Just curious your thoughts.
Yeah, I have so many thoughts to what you're saying. So I think with litigation, I like to kind of go back to the late 90s. And then, so from the late 90s to 2007, and then there was immense kind of pressure to change, for clients to change how they thought about litigation following the Great Recession, right? And what you're saying is true. Yes, litigation shops, they have big swings. And I think the people who run those shops are very well aware of that. I think what is harder to perceive, because it's subtle and it happens over time, is the changing viewpoint of clients on budget predictability, on how litigation work is managed, how they hire litigation counsel across the entire value spectrum. So I do think that kind of the litigation boutiques at the tip top of the market, I think they have every opportunity to have a monster year in 2021, 2022, and they almost have to, because 2020 was so slow. But there are a few other things happening, right, where I think for higher volume, lower consequence litigation that really ought to be bundled into portfolios, there's just incredibly sustained increase in client expectations for that to be managed as a risk portfolio, right? Rather than kind of an artisan, like, gladiator battle in court. So I think that shift we will see accelerate. Because we are entering a new wave, what I call the new austerity, where corporate counsel are really looking to double down on a diversified supply chain that includes legal technology, that includes ALSPs, right? And then so in the lower kind of priced tranches of the litigation market, I think we are about to see a second wave of enormous wave of innovation like we saw after the last recession.
Yeah, so let's talk about that in our last few minutes. I feel like the audience has a really great sense of what happened in the law firm community this year. So thanks for that, because that is the real takeaway here. But it's a great transition to, there's so much excitement and activity in legal tech. In the last quarter or so, we've seen 3 companies, 2 in contract lifecycle management and 1 in litigation, reach unicorn status in pure legal technology. Something I've been shouting from the rooftops for years, like, this is gonna be big. You're gonna see some real mega winners. You saw your first SPAC with the former managing partner of Kirkland, formed simply to invest in legal and reg tech. I guess, we talk about this a lot on this show, so I'd love to relate it to what does this mean for the law firm world and for the world you just researched so thoroughly?
Yeah, so I'm actually going to just call out 3 unicorns that you referenced, Ironclad, iCertis, both in the K-Tech space in contracts.
And K-Tech.
Yes, I love that. I love that term, K-Tech. So, and then Relativity, which is a well known in the e-discovery space. Sure. I think kind of looking at where the investments are flowing helps us make sense of what's happening. Contracts, I mean, the valuations we're seeing ridiculous multiples, right? Like 50x, which is really, really high even for a SaaS company. So I think what it tells me is that the tooling is finally ready for us to apply technology to the content of legal services, not just the mechanics and workflow, right? And I think investors, technologists, and corporate clients are seeing that, and there's immense value to be created in the contract space. And that, I think, gives us a sense of how broadly clients want to see innovation applied to legal. Right.
I just want to make sure I'm following that comment, because I think I understood it. But for if there's any lay audience out there, you mean doing things that were traditionally considered legal work, as opposed to steps in that process?
Yeah, I would phrase it this way.
Sure.
I would say that technology that is able to displace lawyer hours, right?
Got it. Yeah.
I think that is what's coming to market now in a way that, was not possible 10 years ago. Yeah. So because of that, and because every commercial organization has contracts, right? It's a huge market. So I expect a lot of activity in that area. And I think litigation is about to have like a renaissance. legal innovation in litigation is about to have a renaissance. It's taken a back burner, I think, to reg tech and deal tech in the last 5 years, but litigation tech is going to come roaring back because of NLP, natural language processing, the things that we're able to do with extraction and abstraction of content in documents. I think, we're going to see a lot of innovation in drafting. That is somewhat new. I think drafting is a really exciting area across all subdivisions, right? Contentious, transactions, and advisory work. Mm-hmm. So I think because the tooling is getting better, it creates new commercial opportunities for innovations and products to come to market. I think that's what we're seeing. And I think we're going to see probably 2 to 3 more unicorns in the next 12 months.
I love it. You heard it here first, 2 to 3 more unicorns in the next 12 months. Jay, I say after I say it's really weird. Like you don't remember, don't forget. So thank you so much. This was fascinating. Such a great article. Everybody pick it up and read it. And I will see everybody next week on Future Law Bootcamp. Thank you.
Thanks all.